So you want to own an Airbnb, but you don't want to tie up all of your money in it, don't we all? But what if I told you there's a way to buy it, renovate it, get it rented, and then refi all that money right back into your pocket? That's exactly what we do with the BRRRR method, the BRRRR method. It's using the BRRRR method with short-term rentals. And today I'm going to break it down step by step with my most recent BRRRR, and it was a doozy, probably my biggest BRRRR project to date. I've got a lot of experience in this. I literally scaled my entire portfolio all the way to a $10 million portfolio using the BRRRR method. It wasn't all BRRRR method, but 90%. So we have a really good idea of what it's going to take to rehab a bunch of properties and keep recycling that cash. And one thing you got to know is you're going to have to get more comfortable with financing these things with more aggressive debt. Sometimes you go, oh my God, fix and flip debt, stuff like that seems so scary. It's not that bad. I know this firsthand because that's exactly how I scaled my portfolio, was using the BRRRR method. And it's a little scary at first. You know, you're using more aggressive loan types and it seems like, why would you do this? These are terrible interest rates. But with those interest rates can come great velocity of capital, meaning you're going to earn at a higher rate as well. So it's really just an offset. So if you're working on getting into the short-term rental business and you want to do it with little to no money down, this video is just for you. And the best part is, as you continue to add unit after unit of cash flowing deals, what happens? That cash flow compounds, the appreciation compounds, the tax savings compound. And before you know it, you're saying bye-bye to your W-2 and you're building wealth on your own terms. So let's jump in. You've probably heard of BRRRR, buy, rehab, refi, repeat. It's a great strategy, but there's one problem. Long-term rentals don't cash flow even a third as well as short-term rentals. And in today's market, long-term rental income is even smaller. It's really hard to make the numbers work. And if you have one bad HVAC issue, there goes all your profit for the year. Think about it. A regular long-term rental might bring you in $300 a month, right? But a properly optimized Airbnb on the lower end, probably $2,000 a month. Can you imagine just trading in that long-term rental of $300 a month for potentially $2,000 a month in net cash flow? Major change. And what's even crazier, some of those nets can get even higher. We've had people hit numbers as high as $7,000 net per month. It's insane. So there's the cash flow, right? And you put all that money into it, but if all that money's in it and you got nowhere to go until you build up that nest egg again, what do? You got to wait. But that's the cool part about the refinance element, right? If all of that money has been put into this property to make it an amazing cash flowing asset, and then you start doing short-term rental and you're earning really high returns, then you do the refinance to get some of that capital pulled back out of the asset. Now you can deploy that into your next project. And once that money is in the next project, while your other cash flowing Airbnb is making you money to make it easier to build this along the way, you start feeling the balance and the support of multiple properties building toward the same goal, which is getting you out of your W-2. So if you're looking for a way to stop trading your time for money and start creating a real future that you control, this might be the best thing you can do. Let me show you exactly how it works with a real example. I'm going to share with you my most recent project. It was the Derby flip. We actually closed this on Halloween. Kind of funny. Didn't get started until November. And what happens when you're starting in November? You got Thanksgiving coming up, Christmas coming up. You have all these delays with weather because it's getting colder and it was not ideal. But I'll kind of walk you through the work we did on this project so you can understand how big of a project it was, but also why we took the risks on this. Any good investor is going to only invest on a project where they see it has upside, it has value, something that they're going to get out of it that will make all the pain worthwhile. I've done a few projects in this area and I've seen that when you have an excellent product, people are paying premiums for that product. So we got an Airbnb there. We did another rehab there and we were like, oh, wow, the values are coming in really well. The Airbnb tenants tend to be a lot nicer. They're higher paying. Maybe we should continue down this path. So of course, when we saw this property pop up on the market, we said, let's go for it. So this property, it was kind of a boring little ranch, had a bunch of trees everywhere. We said, let's go ahead and buy this. We can get it for $380. The reason I don't think anybody wanted it was because there were numerous death traps. And by death traps, I mean 110-foot trees that were just waiting to come down on houses and garages. And they were all being held together by these wires. So apparently what I saw was the owner probably couldn't afford to have these removed. And rather than actually handle the branches coming down, they paid somebody to go up there and wire them together. So I said, all right, this is just a risk waiting to happen. And this is why people aren't buying it. So can I make this nasty rock into a diamond? Probably. So I got to work. I did the hard stuff. And again, guys, that's just the most obvious lesson. When you are willing to do the hard stuff, that's where profit will be made. So when people are running away from a problem and you can run through it, you have an opportunity. So I first got quotes for $20,000 and $30,000 to remove these trees because you had to get a crane and they were so big and they were so risky. And after trying probably 7 or 8 companies, I got a guy that was willing to do it for $10,500. And so why did I get rid of these trees? Why did I have to get rid of these beautiful things? Not only for the safety hazard, but what they were preventing us from doing. So what was weird about this house was the driveway actually stops at the front of the house. And in this type of area, nobody's going to want to pay a premium price for property without a driveway to the back of the house, even if they never park back there. So I said, I got to fix this, and I'm probably going to add a garage. Didn't add a garage. I'll tell you why later. But as we keep going, I go, all right, these trees are literally in the way. I'm going to have to get rid of all these trees first to even ever have a chance to put a garage. And if I do the hard thing, it will work out. That's what I had to tell myself a few times, because that's all you can do when you need that comfort. And sometimes as an investor, you need it and you deserve it. So first, I'm going to knock these trees out of the way. Then I'm going to redo the driveway. I'm going to triple the length of it all the way to the back of the lot. And at that point, we can add a garage. Now that driveway, there's another $12,000. So what are we at? We're at $22,500. And guess what? I'm not even in the damn house yet. Ugh. You see why people didn't want to touch this? They knew this was going to be expensive. Most people probably would have spent over $50,000 getting this work done. But because I worked so hard to find these right relationships, we got it done for $22,000. Now, guess what? It's time to actually get in the house. We get in the house, and all the contractors I had lined up to start right at closing were no longer able to start. Why? Because unfortunately, with our lender, we ended up losing about 3 weeks and getting delayed 3 weeks to close. So at that point, what do most contractors have to do? They have to continue to make money for their family. So I lost my key contractors on this. They were gonna be pushed out too far, and I was like, screw it, I got to try somebody new. So I tried somebody new, and here's what I did. I hired a guy, did a good job, but he only did about a day's worth of work, and he was hoping to come back a week later to continue, but it didn't work out for his schedule either. So $2,100 of a day's worth of work, was it worth it? Probably not. Was the work good? Yes. Did I enjoy that person? Yes. But again, working with some people's schedules can get pretty clunky. And in my anxiousness to get this thing moving, I probably did waste that $2,100. I really didn't need to spend it there. And I had that original contractor come back to me about 2 weeks later and say, hey, you know what? I moved some things around and now I can get to work. So in walks our contractor. He gets going. These guys were relentless. It was my first time working with them. So after blowing that $2,100, I felt like, man, I'm screwed. I got to keep pushing to find the right GC. I'm looking around. I'm trying to get people that can handle permits. And I'm like, you know what? Let me go and talk to my people that I just worked with. Let me see if they have somebody that they can recommend. Because typically skilled trades work with other skilled trades. And guess what? When they're a good tradesman, they usually know other good tradesmen. So I said, hey, driveway guy, my guy that was going to do the egress window, he's not available for another 6 weeks. Do you think you could do this? He goes, funny you say that. I do egress windows. And I said, okay, cool. Get started as soon as you're ready. Long story on that one coming up. Second, I talked to my guys that took out the trees and I go, hey, do you got anybody that can do this? And he goes, hey, actually, we can do this. He walks the property, he quotes it all within a couple days and gets started a week later. So this was a really good opportunity. Now, what was tough was I have a key painter that I love and I love working with him. I have a key flooring guy and I love working with him. But this new GC was like, I want to be able to take the paint and the flooring. Now, overall, I will tell you this. The paint turned out pretty good. The flooring, it wasn't a great install job. It was okay though. And in hindsight, I will never do that again. I missed my painter very much on this deal. And I definitely missed my flooring guy. So I learned a lot of things, but I will say this group did a great job with framing and tile work. And for that, I appreciate them. And they busted their tail 6 days a week, even on the holidays. I didn't make them work on the holidays. They chose to. They knew that they didn't have to work. So it is what it is. But I really appreciated their work ethic. They crushed it. And overall, I would work with them again. So from that contractor, the total cost was $38,000. So one thing I should also add is that GC did say they were going to pull permits, and they are a Spanish speaking group. And at the end of the day, after they wrote and said that they were going to pull permits, they said, no, bad English, sorry. And it didn't happen. So you know what? I ate it. I had some troubles with the city. We got through it though. Honestly, the city officials there were really, really helpful. And they let me handle pulling out my own permits. I learned a lot about the experience. Never really had to pull my own permits. And I'm glad I did, because now I have a way better understanding of how these things work. And remember, like sometimes these problems, they really are opportunities to learn something new. So I am actually kind of happy with how it turned out. It could have been cheaper. It could have been faster, but here we are. So if we add up the trees, the driveway, and the rehab labor inside, we're already at $60,000. So now you can see that these things can pick up really quickly. Then it was time to get the electrician in. Mind you, there's two phases with most rehabs. There's the rough side and the finished side. And the rough side usually includes your plumbing, your mechanical, your HVAC, and anything that's not a finished material, not usually the product that you see finished, where it's user-friendly and nice and no dust. That's all your rough stuff. The pre-finished version of everything is rough. The finished stuff is pretty obvious. It's the countertops, it's the tile, it's the flooring, it's the paint, you know, but all the rough stuff is the drywall, the plumbing, the electric, the HVAC, the stuff that's behind the walls, the framing. Now, some of the framing stuff that we had to do was pretty incredible. We actually moved around several walls. They weren't structural walls. They were just stupid little walls that were built by kind of mom and pop, and they were kind of in weird places. And the living room, it looks quite different compared to the original. Obviously, that was the whole intent, right? And now the room feels inviting and cool and fresh. And to take this time capsule and turn it into that was a very exciting feat. This was the kitchen. We were really back and forth on this. Overall, the cabinets were in really good shape. Hated the countertops though, and we hated the pulls. So we said, let's fix that up. We hated the floors, ripped those out. Here's what we ended up with. We did these cool gold pulls. We did this really unique terracotta backsplash. Most of the finished materials have a bit of a gold tone, as you can see. And then of course we got the new countertops going, and I really think it brought it back to life in a really great way. We added color to this place too, because we wanted to show some depth and tone and a little bit of personality, because a lot of the times when people flip properties, they just kind of look boring, and we don't want to be boring anymore. Also, we put in some new appliances, because the old appliances, while they worked, they were a little dingy, and you know, we just wanted to make sure we finished it with a very attractive thing where people said, heck yeah, I can cook in here. I would enjoy eating in here. And the room itself didn't allow enough opportunity to move around the kitchen. So the cabinets being in such great shape as they were, we said, let's just run with it. And this is how it turned out. This was the main bathroom. This bathroom was hit. I mean, I couldn't figure out how to save this thing. So we gutted this thing. Here's how it turned out once we gutted it. We actually, all new tub, all new tile. We actually built out the wall on the side to make a full length run cutout. Most of the time people do these little cutouts that barely hold your stuff. We went wall to wall with that cutout, so you can throw whatever you want on that. All your wife's everything possible that she can find at the store to put in her hair and like body washes is all the room for it. This back room was kind of interesting. It was kind of dark and dingy. There was the shelving unit built in, and I said, why do we have these shelves? I can't make this make sense. So we decided to get rid of those shelves, pull it flush, and this is how it turned out. Once we did that and we kind of changed the tonality of everything, it became this cool little speakeasy, sit down and have a drink type of room. And I just love it. In fact, when I was there the last couple of days doing some finishing touches on it, I just sat there and I was like, I could just sit here all day. I love this room. This is the room just behind the room I just showed you. And as you can see, this is what led to the kitchen. And you can see these cabinets back here. There's a weird wall of cabinets. We just blew those out. We felt like it did not help add to the flow going into that back room. So we got rid of it, and adding to the flow, everything beyond the wall of this glass window was actually an addition at one point back probably 20, 30 years ago. Now, because this was an exterior wall, that's why you saw the glass block, and this usually would not have been that, but we said, let's get rid of this. Let's cover this up and let's inset it for a TV. So on the other side where you just saw kind of like the sit and have a drink room, that's actually inset. So there's a TV in there, but on this side, we made it flush. And now I'm going to show you what it looks like. Now it's a good, clean room. It's not weird. There's not two entrances with this big glass block wall. It looks intentional. Then we get to the basement. As you can see over here, you can see these closets. What's funny about them is they were unusually deep. They were like 3 feet deep. And behind there was a photo developing room. And I was like, this is so weird. Nobody's going to use this. How do we make this make sense? So we blew all that out. We blew all this stuff out. We pulled this wall out to here. We went back this way, and then we made a bedroom out of that room back there. We got rid of all the plumbing and stuff that was there for photo development. And of course we painted new flooring, and here's what you get. This is obviously aiming toward the exterior wall. Where we're at right now is actually where another TV is. And you can see we have 2 cool little arcade games. We have a full-size pool table, and overall it's a really cool hangout. We wanted to create 3 intentional types of rooms in this house. One, just kind of a standard, cozy, relaxed living room that's kind of vibey. And in that back room, we had that cool, have a drink, enjoy a little sunlight, watch TV if you want. And maybe it also functions as a little spillover eating area. And then we made this cool game room. Let's downstairs, go have fun. You can be a little bit louder, enjoy yourself kind of room. And on top of that, we added a hot tub. That hot tub is just for what you would think. Get in there, relax after a long day, and come back in and play some pool. This is the master bedroom that's on the other side of where that shelving room was. And I thought it was really weird how there's shelves built in here, and then there's this other closet right here. And I was like, this is just sucking up so much area. There's no good place to put a bed or a TV. So I blew this out. I blew out the shelving. I pushed it all the way back to that speakeasy room wall because I wanted to maximize the space in this room. So here's how it turned out. You can see that now that we have room for a king size bed, we got a TV on the wall. Can't see it from this angle, but we obviously have nightstands and a few other things. Here's another angle of that same room. And then there was another bedroom in the front. We decided to obviously do all new light fixtures and wallpaper, and here's how that turned out. Again, so far people are loving it. Booking just started 2 hours ago, and they have $1,100 coming to us for their first 4 nights on their first day at this property. So we're very excited about this. And again, we're going to be trying to push this property closer to $8,000 of gross income per month. And here's that funny little room I was telling you about that eventually got turned into a bedroom. Here we go. This is the before and after. You can see that it had the old school shuffleboard here. Here's what happened after we changed it. And now we have a double queen bed down here. There's also a TV on the wall where this picture is being taken from. And honestly, for a basement bedroom, it doesn't really feel like one. It felt very cozy, very relaxed. I was surprised to say that I honestly would enjoy sleeping in this room. I don't normally care for basement bedrooms, but that's the thing. If you can make a basement bedroom feel that nice, it's kind of awesome because you get a little bit of separation, a little bit more quiet. And honestly, I like it a little bit cooler. So here you go. This was the downstairs bathroom. This thing was hideous. Check this out. We went from this to this. Now we created a full stand-up shower. We moved around how the vanity was set up, and now the whole bathroom actually feels functional. When we bought this property, it had 4 bathrooms up top and 1.5 bathrooms total. Once we finished this property, we actually converted that back master bedroom into a master suite, and now it's 4 bedrooms and 3 full bathrooms. And again, this property is just under 1,700 square feet, and people are loving it. And of course, there were materials to all that labor costs and all the moving around and the painting and the drywall and the tile. That total added up to about $30,000. And once you add up all the weird plumbing and electrical and the this and that and the dumpster costs, honestly, once you add up all those little things, we were at nearly $110,000 in this property, which is definitely a lot. And on top of that, there was the decor and the labor of all the furnishing and all the actual furniture that we needed in that property. So what did that cost us? Another $39,000. So in total, we're in this for about $150,000. That sounds stupid. 380, 150, but what was it worth when we were done? Let's find out. So when I pegged this thing initially, I said, okay, the value should be somewhere around 600 something. And when we bought it, the appraiser said, hey, your after repair value, I don't think you're gonna break 515. And I was like, hold my beer, because that sounded like a challenge. And I saw opportunity that the market was still in demand for. And I said, I'm going to push that. I'm going to push that envelope. And I did it. And people said, hey, this is stupid. This is dumb, dude. You might lose. And I was like, you know what? I might lose, but I also might break even. And this is such an interesting project. And I'm still buying it at a price I feel pretty good about. And if I had to keep it or even sell it at a 0, maybe even a 10K loss, I'm glad I would have learned from this. And look at what I got out of this. I knew what my risks are. And here's what I got out. When I got the appraisal done, they said, what are you targeting? I was like, honestly, I can see argument for 600, but there's this one comp that's kind of nice. I think it went for like 640, 650. And he goes, oh, I saw that one, but it did have a garage. I said, okay, I understand. If we land at 610, 620, I'd be ecstatic, but you know, you got to do what you got to do, Mr. Appraiser. He says, hey, no problem. He walks the property, he calls me, has a few more questions. He comes back, sends me the appraisal. 650 on this. He says, this is probably the nicest ranch that this area has probably ever seen. It's so intentional. It's so interesting. It's tasteful, and it's kind of fun. And honestly, if it was on the market, I'd probably consider buying it, except I want a slightly bigger house. But if you design anything like this, again, a little bit bigger, I'd probably buy it. And that also told me that the work level that we're now hitting, our ability to see things that aren't there and create them for a market that is still being missed, that alone is an opportunity that we can keep satisfying, because it's honestly just what excites us, and people love what we do now. So if I sold it right now anyway, if I got my 650, I'd be able to net $78,289. Not too shabby. That's after all my selling costs. But right now, if I don't sell it, I've got an actual equity value of $117,000 in this property. So if I get a 75% cash out refi on this property right now, my value available will go up to $487,000. That's over $100,000 more than what I bought the property for. So what does that mean? I still have money stuck in the deal, don't I? Now, how much money is stuck in that deal? That amount is $45,000. So what happens is, of all this incredible capital we've put into this deal, I'm still getting $45,000 back out. With almost $100,000 coming back into my pocket, guess what I get to do? I get to keep investing. But what happened to that $45,000 that I didn't get to pull back out? Well, I got it in there there as a down payment, right? And then that's in addition to the 25% equity I've created above that. So at this point, I own a house. I bought the house for $45,000. Now, can I buy a $650,000 house as an investment property for $45,000? No. Most investment properties, if you buy them completed, are about 15% down. If you're lucky, 10% down. Sometimes you can even pull off 5%. But 10% of a $650,000 property would be $65,000. So automatically, I've saved $20,000 on what it would have cost me if I could even get a 10% down payment loan on this property, but it's already built in. And on top of that, since I created a high value asset that I didn't have to buy at a high price, my taxes are also lower than what they would have been had I bought it at $650,000. Therefore, my holding costs on this property are actually lower than what they would have been if I bought at $650,000. So there's more and more little benefits that come from creating value in assets rather than buying properties that are already set up and running well. This is a massive skill I hope you all learn, because at this point, with $45,000 in this property, moving forward very conservatively, I should make at least $1,000 net per month on this property. Now, that's not a lot of money, but comparative to how much money is in the deal still of my money, $45,000, that's $12,000 annually versus $45,000 in the property. And as a cash on cash metric, that's 26% cash on cash. Most people can't get that anywhere, but we created that asset, and I just got another 100 grand I get to go put into another asset that can create another similar outcome. If I keep getting 26% cash on cash on each one of my properties as they appreciate in really high demand areas, and I'm getting tax write-offs, and I'm buying them where the property taxes are already kind of set to be a lot lower than what they would have been had I bought them at their premium value, I'm getting multiple benefits at once, and it compounds and it really improves your financial situation. This is the power of the BRRRR method. So hopefully you're getting an idea here. And again, a likely outcome is we will be hitting over $2,000 net per month on this property. And with that cash on cash ratio, what is that? That's $24,000 a year. $24,000 on $45,000 is a 53% cash on cash return. That is powerful. Keep that in mind when you're looking at your next BRRRR opportunity. Number one, you got to look for a property that has a lot of value you can add in a high demand area. You need to figure out your numbers, and then you need to execute on that. You need to buy it. You need to get it under contract. Make sure your contractors can get the budget in line with what you need. Make sure that the after repair value makes sense. You know, roughly 75% of the after repair value is what your total cost should be between your purchase amount and your rehab amount. So again, if you bought it for 200, it needs 300,000 in it, and it's going to be worth 400. That 300,000 is 75% of that 400. Make sure it's in a location that does allow short-term rentals. Yes, not all locations will be happy to have that, but sometimes they're okay with midterm rentals. And that's another great option for you because they're both just a furnished rental. One is for 30 days or less per month because at the end of the day, they're both furnished rentals. Number three, go for the refi. Once the refi money is pulled out and you're ready to build up a new down payment to buy another property, repeat. I have experienced firsthand the power of the BRRRR method, especially with STRs, and I really think that this is a great opportunity for you. I'm glad I got to share this particularly new example because it's very fresh in my mind. It was a really fun project. Not to mention, it was a great outcome. I've scaled my real estate portfolio with this very exact method, and I promise you, you can too, even today. If you're serious about taking action right now, I'm opening up a few one-on-ones, and I want you to go ahead and schedule one ASAP. I'll personally help you kickstart your Airbnb journey, and that's all we really want for people. We want them to find that power and that belief and execute, because when you do, it is life-changing, and we want everybody to be in a group full of amazing, life-changing people. If you found this valuable, as always, please like, share, and subscribe. We really appreciate your help here. This is your chance to stop trading your time for money and start actually building toward a beautiful life full of amazing opportunities as a real estate investor and an entrepreneur. See you in the next video. Don't miss it.